Hey traders, Marcello here, founder of the Day Trading Academy. Today, we're going to be talking about how the stock market works. We're here in our trading center in Medellin, Colombia. You can see we have some of the t-shirts that we give some of our traders. It says here in Spanish, we don't need luck, we're traders. And obviously we have different colors and stuff too. This one says printing money because we're traders. So obviously we try to make it trading a fun thing. So I wanted to explain to you guys, I know you guys in the United States and a lot of you guys, especially in Australia, Europe, Canada, South Africa, most of you may know the majority of kind of the intricacies of the market, but I also wanted to explain how exactly it works just so everybody's clear, because I know even though a lot of you guys are interested in or know what stocks may be, you might not know exactly how it works, and that might be why you're looking for this video, okay? So let's say I have a company, I have a marker company, and I'm selling markers. I revolutionized the technology for markers and they erases automatically after 30 minutes. I don't know. So it's going very, very well. I start selling them to the local schools, I start selling them to the local universities, and then after that I need to start borrowing money to be able to get to the point where I can open up a new office in another city. I can open up another office in another country in the future. So I borrow money from mom, I love you. You borrow money from your friends, from your rich uncle, from all these people, and then you max them out now, right? And then you need to borrow even more money. So now you go to the bank, they deny you, you get more money from another bank, and you start growing, right? Now you're a regional company, not just a one city company. You're in all of the eastern seaboard, New York, Boston, Chicago, Miami, West Palm Beach, Jacksonville. And then you get to the point where you can't grow anymore unless you get more money, because you have to open up more offices, you have to be able to produce more pens, you want to open up an office in the Philippines to be able to produce them cheaper, to increase your margins. So you go to a venture capital firm, you go to a group of investors who are going to start investing in your company. So now I own 100% of Marcello's markers. Marcello's fantastic markers. Marcello's Exquisite Markers. I like the name Co, right? Marcello's Exquisite Markers Co. And I'm going to tell these group of investors, well, look, why don't you give me 10 or 20 million dollars and I'll give you 40% of the company or 30% of the company, right? Whatever the case may be. So we create a contract that no matter what happens, I'm going to give them 40% of the company. Right? So they give me let's say $20 million. I use that money to go to the other half of the country. So now I'm all the way from, let's say, Kansas east, or I think east for you guys is this way. So Kansas all the way to New York, Miami, everywhere. I'm looking to open up an office in Canada, 2, 3, 4 years down the line, but I need more money now because I've already maxed out, right? I can't borrow any more money from the banks. I can't borrow any more money from mom. Mom, did I say I love you? So then, I gotta give props to mom. Makes great cookies. So then, I need more money. So it gets to the point now where the investors want to go global. This isn't just a United States company. It's not just a regional company. We're going to turn into a multinational corporation. Marcello Exquisite Markers Co. I love that name. Maybe I'll register that. So we're going to sell 100 million shares in the stock market, right? And with those 100 million shares, we're going to sell, let's say, 49% of them. So we're going to sell, just to make it easy, I'm going to round it off to 50 million, okay? So we're going to sell 50 million shares, okay? I'm going to own 50 million and one to have the majority always, because I don't want anybody to control my business, okay? And of the amount that we're going to sell, let's say the company wants to sell, but at the end of the day, we're going to sell this amount. We're going to sell at $50 a share. Okay, so if I do the math right in my head, we're going to be able to sell $250 million in money. Now I'm going to be able to have the capital to be able to take the company public. So now I don't just own it. The company that invested money doesn't just own it, right? Now the public is going to own it, or at least 49%, because I don't want to give away the majority. Now with this money, I'm going to be able to go ahead and do a lot of things. Go global, increase revenues, increase profits, give back to the community, to the poor in Africa, everything. So we go from being private, right? Then going to an IPO. When we go IPO, that's called an initial public offering. We're going public for the first time and selling our shares to the public instead of just being private or selling it to investors but still being a private company. And then from there, the company becomes public. Once the company becomes public, obviously there is a perceived value of the company. So if I sold the company originally for $50, okay, if I increase profits, I go global, I make a lot more money, the value of the company is going to increase. So it's going to go from 50 to 100 to 250, 900, etc., etc. But if I don't do well, or we have a crisis like we had in 2008, 2009, or there's a restructuring of the company, we couldn't get into China like we originally thought because it's a protectionist society, then obviously the value is going to go down. So over time now, the public is going to decide what the value of the company is. And so once we go public, we're placed on an index. An index is basically where the stock market exists, especially in the classic form that we think of. So we're going to have, I'll do this in green as well. We have a space over here, yeah? Tenemos espacio. So once we go public, we're going to go on an exchange. And on the exchange is where the stock market exists. So now the value of my company is decided by the public. How much money we're making, the decisions we're making, how fantastic the markers at Marcello Exquisite Company Co. I should probably do a little bit shorter, yeah? Anyway, so we have stocks, which is this primary example that we just gave to you, right? When I sold 49% of the company, 49% of the company is owned by the public. So if one person bought if one person bought, let's say 10 million shares, like Warren Buffett, he would own 10% of the company, right? That's how it works. So it's a little bit tricky to trade stocks because obviously there's certain requirements like having a minimum of $25,000. There's other requirements like not being able to trade more than 3 times if you don't have $25,000 in your account. But there's also different markets that we can trade. So we also have Forex. Forex is the foreign exchange market. Notice for an exchange market. And essentially the Forex market is just the difference between the values of 2 currencies. The euro, for example, compared to the dollar. And there's a lot of things that can happen based on the monetary policy. Not to get too much economic jargon here, but if the US decides to increase interest rates, then the value of the dollar increases because more people want that bigger return. It's supply and demand, okay? After that, we have derivative, which I'm going to explain what it is. We have futures and options. We also have something called CFDs, which for us in the United States is illegal, but I'll still explain it to you. We have binary options. And I believe, if I remember correctly, I believe that's it. So Forex is just the value of a currency. Right now, the dollar is the primary currency in the world. Most of the currencies that people use are going to be the US and the euro. The other popular ones are obviously the pound from the UK, the Japanese yen, the Australian dollar, and the Chinese renminbi, which is the Chinese currency, is still not able to convert publicly because of the controls they have in China, okay? So these are all the different markets that we can trade on. Futures, just to explain to you, just let's say we're buying a house. We're going to sign a contract saying that we're going to buy this house in the future. That's a futures contract. Apply that to every commodity, every physical product that we buy. Oil, gold, silver, cotton, wheat, meat, everything. It's on the futures exchange. Because a lot of times what will happen is you can either speculate or you can hedge. Let's say we have an airline company. An airline company is afraid that the value of oil is going to go up. So what do? They buy a contract in the futures market saying, I'm going to buy oil. I'm going to make a contract to buy oil in the future at this moment in time. And then this is something that Southwest Airlines did very, very big, where they were able to still make a profit when the price of oil went up because they bought futures. Another way that you can do it is options. So if I'm an airline, I'm going to buy the option to buy oil at this time in the future. And this is very easy because instead of having to pay $50 per share of stock, or $100 or $250 or $900, we're going to only buy maybe $3 to have the option to buy this stock in the future, right? If it goes up really high, I'm going to cancel the option. But if it goes down to 40 or 30 and I still have a lot of trust into Marcello's exquisite marker co, yeah, we're gonna exercise our right to buy the stock. So that's how these work. Very, very simple. So one of the reasons that we trade futures, right? We specialize, we trade everything, but for the most part we trade futures because these are what's called derivatives. And I'm going to explain to you what speculation means. When people buy a stock, there's a lot of laws and there's a lot of situations involved, legal things, because I'm technically buying a part of the company, a share of stock. So just like Warren Buffett, who bought 10% of my company, Warren, holler at me. He has to report that he owns part of this company. Whereas in the futures market, right, we don't need to report anything for the most part, at least not as much as stocks, because we're not buying ownership into a company. We're just speculating what direction a certain market is going to go. So if we think oil is going to go up, we just buy the futures contract at a certain period in time and we sell it in the future. No holds barred, right? So that's why we prefer this. And obviously with futures, instead of having to trade with $25,000, we can trade with a minimum of $1,000. So, and well, I'll explain that in another video why it's better. But CFDs are contracts for difference. This basically means that we're betting on the amount let's just say the difference in price, right? A lot of people ask me about CFDs. I don't have a personal opinion about them because I've never traded them. Obviously, full disclosure, right? But I also believe that the United States is the most capitalist society on earth. No matter what it is in the United States, we're all about making money. Whatever we can do about making money, that's what we want to do. CFDs are illegal in the United States. So that to me says a lot about that actual market. Binary options, I would deter you at all costs. I'm sorry if you guys can hear that construction, but I would deter you at all costs in trading binary options because it's one of the most manipulated, fraudulent markets in the world right now. The FBI is investigating this market for the amount of fraud and everything that's going on. So I'd encourage you to not trade this market, even though you can start with just $5 or $10. So that's one thing that I'd recommend that you do, or recommend you don't do in regards to the binary options. And this is really essentially how the stock market works. We also have other markets called ETFs. These are not necessarily derivatives, but it's called an exchange traded fund. So there's a fund that trades on the exchange for us. So what they do is they'll go and do the research. If we're interested in technology companies, they will have an ETF for only technology companies. So instead of you having to do the work of investing time to research all of these companies, what can you do? You can just invest in the fund. And then for a small fee, they'll do the work for you. So this is essentially in a very simple format how the stock market works. We have a private company, we go to IPO, and then we go public. There has to be a market of where we can buy and sell the value of our stock, which goes into the stock exchange. There are different types of stock exchanges. Do I have tengo espacio acá? Okay. So we have different kind of exchanges, right? We have a technology exchange in the US called the NASDAQ. We also have another one like this, which is called the ICE. There's a new exchange. I'm sure that you guys have maybe seen this popularized by the news. There's a bit of market manipulation called the high frequency trading. High frequency trading is where a company, not a company, but a robot basically buys and sells in front of our orders, and we lose money and they make hundreds of millions of dollars a year. So there's another exchange, I forget the name of it, who's just going to list their first stock that stops that manipulation from occurring, which is legal, by the way. We have the S&P 500. The S&P 500 is the 500 biggest public companies in the United States, okay? We also have the Russell 2000. This is the market I have a little bit of a heart for because it's the first market I started trading in. This is the 2,000 largest small businesses in the US. You know, we have the mid cap, the Dow, which is one of the biggest ones. See, these three are the biggest, or the ones that are more popularized. The Dow is all the industry companies, right? Transportation, you know, all that kind of gritty stuff, manufacturing, all that good stuff. So depending on what kind of company I have, when I go public and I'm going to sell my stocks on an exchange, we go here. The most recent example of this is going to be Snapchat. Snapchat is a technology company. So with the technology company, right, they go to the NYC, I believe it was, right? That's another big exchange, New York, NY, New York, S stock, E exchange. And that's another, obviously, exchange where people can go. So this is really as simple as it gets. One other thing you guys should know about the stock market is it's a zero-sum game, which basically means if someone is buying, someone is selling. If someone is winning, someone is losing. It's really that simple. And at the end of the day, I'll be doing more of these type of videos. If you guys like it, let me know. I'll make sure to do a lot more of these videos. And I hope you liked it. If you guys have any questions, don't hesitate to let us know. Just put hashtag AskMarcello, no H, 2 L's, YouTube, Facebook, Instagram, wherever you guys want to leave it, and I'll be happy to go ahead and answer all your questions. So it's getting a bit warm in here. I'm going to go catch dinner. We're here in Colombia as well. This is where we have our trading center, so we'll talk to you guys soon.